Hi, welcome to my channel, CC Studies CPA, where I share with you my progress on studying for the CPA exam and tips that might help me along the way, as well as market updates, market pronouncements, case studies that I might find interesting as I go along. So as of today, I have finished chapter 5, finally. It is a bit of a challenging chapter considered to be, but I also took my time with it, and I'm happy to move on to chapter 6. Chapter 5 was about sort of like foreign operations, involving like foreign currency hedging, that kind of thing. So, definitely happy to move on, and it is an interesting chapter. I also want to share a market pronouncement today. It's not a recent one, just wanted to find one that was related to foreign currencies, operations, hedging, that kind of thing. And I found a podcast PwC put out. PwC is one of the big four firms that they put out late last year, and I found it interesting because it's in reference or having some content in there addressing some impacts as a result of the pandemic. So the podcast specifically is um, the Foreign Currency Risk Back to Basics podcast, released in October of 2020 as part of PwC's accounting podcast series. It is one of those what I call on my playlist series that I enjoy listening to every now and again. That they have subscriptions for, like in relation to like CFO material as well. So, during the podcast, they were mentioning how over the past year, the US dollar was staying steady while the Japanese yen and pound sterling and other currencies had declined somewhat. They also mentioned about month to month and quarterly to quarterly volatility in exchange rates as opposed to year over year. Then they touched on how the FASB released some FAQ, frequently asked questions, guidance on cash flow hedging as it relates to the pandemic. Uh, so basically, the gist of the point that they wanted to emphasize from that frequently asked questions guidance was that according to the FASB, a company could proceed with their hedge accounting as long as the hedge transaction they had in mind is, going to be probable of occurring, and it's over the originally quote originally projected time frame, and 2 months thereafter. Um, Additional comments regarding this idea was that the company can also extend this time period of, the time frame plus the 2 months, under the, rare occurrences with extenuating circumstances, of which COVID-19 was considered to be one. And, as long as, that occurrence, you know, of the hedging transaction is going to be probable. The company is, considering all of the facts and the relevant circumstances that they can, and that the transaction is determined to be over what the company would consider to be a reasonable period, which they also have to explain as well. Finally, the podcast, also highlighted, the importance of hedging translation exposures, which apparently most companies don't do for whatever reason. Um, and They mentioned how, according to FASB ASC 280, there are some required disclosures when it comes to translation exposures. And so, for example, revenues and long-lived assets by country need to be disclosed if material, as well as, mentioning other best practices, during the podcast. So this was the market pronouncement I wanted to share today. I think it's, important because there are a lot of companies, who are dealing with COVID-19 in several different kinds of ways when it comes to accounting, need to come and, sort of learn about and apply the solutions that are going to be best for them and everything. And of course, nothing that I have said today is by no means any kind of advice or whatever, it's quoted directly from publicly available information from PwC. This is also not I'm also not sponsored by PwC, although I do love them very much. And I think that they put out really great content. But yeah, so hope you enjoy this sort of market pronouncement of sorts today, and that you have a good morning, good afternoon, good night, wherever you are. And like, subscribe, comment, feel free to. And yeah, talk tomorrow. Bye.